and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat and you can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. Hey everybody, happy Monday and happy MLK Day. Markets are closed. We still have futures market trading this morning. I'm not sure when that gets cut off. We still have Forex going on. Crypto still moving. Sure, everyone feels like they had a FOMO weekend if you watched the Trump coin. Dollar's down, yen is down, Swiss is down, New Zealand is up. I'm curious if that has any play on the China stocks I've been watching the last couple of years. We've got New Zealand up, Euro up, Aussie, CAD, and Pound, but Swiss, yen, and dollar. Dollar took a big hit overnight. Thought that was interesting. Right around 8:30 a.m. And what's on the calendar today? Nothing at all. So I just want to do a couple of things. Markets are closed, right? 597.58 was a close from last week. We are still sitting in between some holiday levels. I don't know if this is going to be a bull trap, but it certainly is looking like one, meaning that the bulls had a nice run. They tested lows. There's a bear trap low, and this would be a bull trap high. Why? Because it looks like, oh, we're breaking the channel, but we have a gap right here and we have a gap right here. So would I be shocked this week to see the market? One of two things, right? Either this market starts to immediately come back in and fill these gaps. So we just fall back in and fill gaps right away, and we'd still be kind of range bound within this, FOMC disruption to the PCE low to the kind of the bear trap down at the election gap fill. That wouldn't surprise me at all. So we either have a gap fill, or the market is on the Trump excitement, and we're back in with a new president. Okay, and we got all-time highs, and it's right there within like a whisker. It's right there, clawing back at all-time highs. But does it blow through those tops? Probably not. So I could see if the market gets a little bit more excited to break above 600 on the SPY and we get to these highs, I'm probably still going to look for a sell trade or a hedge trade just in case the market is going to broaden out. Broadening pattern is a tricky pattern to trade, but it can be extremely profitable. Oops, let me use a couple straight lines here. It can be extremely profitable if we watch it, right? So could this market inch its way up to all-time highs again? Everyone gets all excited. Now, momentum may step in and carry over, but then it's going to look like capitulation, or momentum can get up here. We can be overbought with convergent or divergence, and all of a sudden price tops out, breaks structure, and then starts to roll back down, and we get all these beautiful bear targets to fill. So I think this is the lesser probability because that's going to be a lot more volatility driving traders crazy. But I wouldn't be surprised if we just have gap fills this week. Okay, so just food for thought there on SPY. Nasdaq, very similar. Is this, the sign of a breakout, or is this a bull trap? We still have a gap right here now that could be filled. We have a gap right here that could be filled. We still have the election gap on the Nasdaq that could still be filled. Now we do have earnings this week. Okay, we do have earnings this week. I want to take a look at those. I know Netflix is one of the more notable ones. Let me check here. I think I've got a screenshot in here somewhere. Yep. So here's earnings for the week. I think I took a screenshot in this. All right. Trade on TKO was added in. Trade on the LMT was added in. Trade on XLE was added in. Okay, trade on QQQ. That was my technical. All right, I'm just going to take another screenshot. Here's the earnings plays for this week. Here's some of the notables, and then I'll go through and review some others. But we kick right off with, I would say, the biggest potential mover for the week, or at least one of the big names in the market, would be Netflix. So after close on Tuesday, Netflix is going to have earnings. We've had a bit of a decline on Netflix. Earnings could be great. We could go well outside the expected move. We could stay within the expected move. We'll have a look at the option chain here in just a moment. Consumer staples would be a 3M play. You still have some financial sprinkled in there. United Airlines would be discretionary. Airlines have actually done pretty darn well, like Delta's up to or close to all-time highs. Interactive brokers, kind of the state of trading. We have Procter and Gamble, Johnson and Johnson in the healthcare space, consumer staples as well. Halliburton for some energy. You've got Discover, same thing. I'd lump Discover in the same aspect as like a Visa, Mastercard. Amex is behaving a little bit differently. Got still more, like I said, financials in there. Ally Bank and Comerica, Cathay Insurance with Travelers, Alaska Airlines, Huntington Bank Shares, American Airlines. Okay, so we got a nice little mix of things. I'm looking specifically at like what does Netflix do? Just because I mean everything consensus wise would be important to watch. I think if earnings are not performing well, if earnings are not showing that they're beating top and bottom, so they're not beating earnings per share, they're not beating revenue, they're not beating consensus, it's going to be hard for the market to justify all-time highs. You know, I don't think we're going to have the same type of environment where so few stocks can carry markets higher. The Mag 7 is highly concentrated. The gains, like 40 to 50% of all the gains last year were because of Mag 7 stocks. So I don't think we can repeat that. I think that in order to lift everything, we have steady Mag 7 and we have steady or better from the underperformers, which gives a lot of potential. That's it could be thousands of stocks, but even if you think S&P 500, it's 490 stocks that could perform well, 492 stocks, right? If they perform well, then we could see the broader market kind of get a nudge. Next Air Energy, that one might be interesting on Friday. So anyway, I think that looking at some big names like Netflix and energy could get some volatility. I'll probably stay out of financials. I'm not that interested in crazy financials. If there's a big miss or a big hit in airlines, then it depends on the options chain. I want to see that I get like 50-cent strikes or dollar strikes. I want to be really really precise with my options chain, um, and I price out a couple of them. So I wouldn't mind taking a look at Netflix just to see where things are expected to go. And then I'll bring back the stream here. Okay, and we'll take a look. So dollar is down, which I'm totally fine with. um, and I mean I'm out, right? Like, is my dollar CAD probably still in profit? It's in profit, but that was a big fat dump. Now, again, did it hit? Yes, it did. Oh, thank God. All right, yep. So my profit was hit. Yay! Is this not what I talked about? Is this not what I talked about? We've got some chop. Don't be surprised if this market runs a high or runs a low. And what did it do? Ran the high and then dropped. That is very classic market manipulation where everyone has their stop losses right above that level and they're trying to sell. And what happens? They get freaking stopped out. So that's why I put my take profit at 44.80, and this high was 44.85. I've seen it happen. So my dollar CAD and dollar Swiss both are profitable, and I'm out of these trades. Good. Now I wait. Dollar Swiss took profit at 92. Dollar CAD took profit at 44.80. Now I don't care what the dollar does. Now I have exposure on the Aussie dollar, which is long, and there you go. I'm actually back in profit on the Aussie dollar. How about my New Zealand dollar? I'm upside down a little bit, but if we come back into this pocket, I've got 1, 2, 3 positions in. My break even is at 57.26, looks like. Okay, so if we get back to this pocket around 57.50, or we come all the way back to this potential range level with good support around 58.50, then I'll get out of the trade. So if the Aussie dollar or the New Zealand dollar comes back into this area, I might just eliminate the trade. If it comes back into this range where we have good support, then I'll get out of the trade for profit. So yeah, I'm good with the dollar dropping for right now. Dollar index. This did not show up in trading yet. So the dollar, and like this currency strength chart has shown up in Forex pairs. So if we look at the Aussie dollar on the day, Aussie dollar on the day, pretty nice bullish candle, right? Euro dollar on the day, very nice bullish candle. Pound dollar on the day, bullish candle. I wonder if the DXY tomorrow is going to be gapping. New Zealand dollar, nice bullish candle. Dollar CAD, nice bearish candle. Dollar Swiss, nice bearish candle. And dollar yen has topped over a little bit since the highs here on 158, almost 159. Okay. Pattern-wise on the yen, there's a potential trend line break. I was looking at something like this. If this is a high to low swing, and this is setting up some type of head and shoulders pattern, there's a good opportunity to look for some follow through. One thing that's nice about Forex trading is a lot of these patterns are self-fulfilling. So if we start to break this trend line, like so if we not just break the trend line like, oh, I'm shorting it right here, I think that's too early. I would be willing to say if this trade breaks, test the lows, head and shoulders pattern, or just a straight up break of the neckline with a bunch of sell stops. If this goes to symmetry, we have a lot of space on this trade. Okay, now that's if it goes to symmetry. So if I take this high to low right there, and let's say that we are topping out right now, well, that would project my dollar yen down to 138.70. Look, there's a lot of opportunity to be short. Okay, so if I had a pattern here and I establish a short, or I establish sell stop, sell stop, sell stop, sell stop, sell stop, and I go to my profit target here, I can make a lot of money in that trade. So whether we trade the pattern itself or we trade where price would be going, we could still make money. All right. But how much do I trust the yen? I don't. Would I be willing to throw some capital at it? Maybe. But I'll probably trade options. I'll probably trade the Japanese yen futures, to be honest. Why? Because there's no negative swap. There's no full financing and rollover, but it's going to be defined risk. Okay. Volatility index, we're trading around 1596. SVXY, I'm going to keep a close eye on this one. This might be some income trades for me in the coming months. Dollar index, again, hasn't reflected the price yet. So sensitivity to tariff news. So what does it sound like? Tariffs aren't going to be like just coming out screaming right at the inauguration. Dollar sudden drop in report Monday, Wall Street Journal, that Trump is unlikely to implement immediate tariffs, shows just how sensitive the U.S. currency of the tariff is. Dollar's incredibly sensitive to the tariff outlook right now. New administration getting ready to setting a tone, suggesting that the fast-moving shock and awe trade policy that Trump has promised is likely to be more measured than the markets expected. Okay, I mean, that's probably fine. And is anybody shocked? The guy likes to say things to get attention, and then it doesn't actually pan out to be what he said. We've seen it before. So anyway, that's that. Now, if this is changing the bond market or the bond yields, that's a good thing too. Oil also dropping. Oil has to stay above the 200 moving average. Oil is going to have to stay above the 200 moving average. For me to be even thinking for a second that oil has the opportunity to stay bullish, we'd have to have a pullback here and be looking to bounce. Traders that are a little bit more active or a little bit tighter on the risk parameters would be looking for something like, okay, can you buy the dip on oil? So if we fall on oil and then we show a nice little bullish candle, is that enough to put a stop loss below and then get back to those highs? Maybe. Is this also poke, a little bit more of a poke, but does it just fade all the way back down? I don't know. I'm good staying out of oil right now. Okay. I'm good staying out of market right now for oil. I am long natural gas, but I'm long out to 2027. That would be UNG. So we got all the way up here towards $20 and we pulled back to 18. So it's going to be volatile. define risk. I'm looking to see if we get into the 20s on UNG. Gold. It's be an interesting week for gold because if we break these highs, is it enough momentum to get back up to these highs? Maybe. If we end up stalling again, is gold just going to work within some type of range? Is gold in here for equal highs and equal highs and higher lows? Does that structure lead to an upside break or downside break? I don't know. I'll have to wait and see. Like time will tell. I like the bar count. I would expect to see maybe gold can go sideways long enough for the moving averages to catch up. If gold gets higher, and this is a big if, but if gold gets higher and we stretch further away from the 200, I don't really have that as my big bullish signal. I would say that could be a fake out trade if we hit these highs. So I think gold at best, this is me, I think gold at best is this. We poke the highs, we come back and revisit the lows. So if gold works its way up to these highs, I could see this forming resistance and then working its way back down into the range lows. That would be a great spot to still be welcoming for. I want to buy more gold. I'm looking to position myself in more gold. I don't know if gold is dropping if the dollar gets strong again. I'm not sure. But if the dollar continues to get weaker, we might see gold drifting higher this week. Okay. All right. Gold futures looks pretty similar. Silver, like to see silver get up towards 32 and change. And my first big target on silver is going to be 35.88. SLV, got a few positions on SLV. Bitcoin, we just poked all-time highs today. Why? I don't know. Just renewed optimism in currency. Trump coin was up, what, 28,000%? Guy's net worth went from $5 billion to $28 billion in 3 days. That seems fair. Pivotal moment in crypto. Company will buy Bitcoin for the 11th week in a row, acquiring 2530 Bitcoin on January 13th, increasing total holdings to 450,000 Bitcoin. That's so ridiculous. 450,000 Bitcoin at 106,000 spot. Good freaking Lord. $47.7 billion in value. Now, I know their break even and cost basis is getting higher. I'm imagining like, they were buying a lot back here in the accumulation zone. I know their basis was like in the 30s before this. Now it's probably up into the 40s, 50s, or 60s, but still, that is, Michael Saylor is all freaking in on Bitcoin. It's pretty obvious. But we did poke some all-time highs. There's some renewed optimism. There's securitization. There is legitimacy. All this is looking good for right now. It does make me a little nervous that you can have fart coin that's bigger than like the entire Russell 2000, and you can have Trump launch a coin in 3 days, go up 28,000%. That feels a lot like 2021 NFTs and a lot like 2021 crypto, where it's like everything's getting thrown. Look, if Hawk Tua can make money in crypto, I know it ended up being a big bust, but it's like crap like that you got to be aware of. If that's happening out there, that's just like funny money and speculation money getting thrown at stuff, and it's not going to stick. So I don't know. There's still risk. Okay. Yep. And Melania has her own coin too. So I'm thinking this is, I don't know. It doesn't, it smells a little funny to me. Like this is some funny money getting thrown at stuff. And if you're left holding the bag, you're going to be disappointed. If you're in there somehow, like carving out some gains, good for you. But this is not the crap that I chase. Okay. This is the stuff that makes everyone feel like idiots. Like, how did I not know about this? And how am I not in this trade? And then they throw money at it, and typically they're left being the bag holders. Because that's what it is. Like, there's no way that Trump coin, Melania coin is going to have any real store of value. It's just speculation. So it makes me a little nervous because we've seen this play out before. All right. Anyway, we did poke all-time highs though, so that's not nothing. But just like I said in the S&P, are we going to poke these highs and then still fade back down to the lows, right? Like maybe some more volatility, which if it's consolidating like it did here, like that's okay, right? But you don't really want to see it all of a sudden break lows. So if it is going to go higher, that's okay. If it pulls back here and finds Resistance becoming support. Maybe that's another chance to buy, and we are going to still be in an uptrend. Cool. Well, there's an uptrend. Eventually, we'll probably get some technical support. There's some technical support right there. There's some technical support that could be coming in the future. Depends on what price does. Okay. All right. BITO, no trading on it today, but up a decent amount. I still have shares of this. IBIT has some shares of this. I do have a $67 call out into February or March. Let me see what my IBIT is at. IBIT put in my collar trade. So shares 67 by 40. That's my collar trade. It's out to March 21st. I will roll it if I will roll it if I can. I'll reestablish new positions if it gets called away, or if it's in my favor to roll it, I'll roll it. IBIT here, shares 67 by 40. That's a collar trade. Same thing for March. So it's all protected to the downside, and it's also, collecting some premium to the upside. If I get a call away at 67, that was still like a 15 delta move or 10 delta move, where price would have to be, moving a standard deviation. It'd have to move like 2 standard deviations to the upside in order for me to get it called away, give or take. So, I mean, if it gets called away, it gets called away. And I'll reestablish another core position. I'll protect the downside and put another like 2 standard deviation move to the upside. And I'll repeat that. If we're in a bull market on crypto, then let's trade it, make a bunch of money on it. Okay, is the daily chart on the dollar a bull trap? Lee, did you just ask the opposite question? Is it a bull trap or bear trap on the dollar? I don't think the dollar is a trap right now. I think the trap is, I see a trap here. Not DXY, sorry, SPY. This is where I see a potential trap. I see a potential trap here for this reason. I have resistance, I have resistance, I have resistance, and what did the market do? Well, based on that trend, it broke it. Okay, but resistance, 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 resistance. I could see the market, if we fill this gap right here, that is a bull trap. And this would be coming back to fill this gap. If we fill that CPI gap from last week, then it's a big old bull trap. That makes sense? So I could see that being a trap. And if I'm wrong and the market wants to melt up and drift up a little bit higher, okay, fine. Do we get to all-time highs again? If we get to all-time highs, I'm going to start hedging. Not crazy bearish, but I'm going to hedge, because I think we're going to have, I don't know, something. It feels, I don't know, until I feel like I can just let things go and let momentum be momentum. I do not feel like I could have any real positions without protection. You've had 2 years to have a pretty solid bull run. Okay, the markets tend to have 10 to 15% corrections, indexes every 2 to 4 years. We're in that window. Since COVID, the market's been insane. Since 2018, the market's been nothing but highs and lows and booms and busts. It's been a stupid market for 6 years, going on 7. But the market does what it does. Either you figure out how to trade it, make money, or you're sitting there scratching your head like, I can't figure it out. But I just want to have protection to make sure that if something silly does happen to the downside, I'm not caught on the wrong side of it. So I've got cash at the ready. I'm watching implied volatility really closely. And if we get to, all-time highs, I'm a little skeptical. But we shall see. Okay. All right. So watching some traps there. Dollar index wise, I don't really see a trap on the dollar index necessarily. I thought this was a trap on the dollar index. This was a bear trap all day long. Okay, why is that a bear trap? Well, look left on the chart. You can see that we had support, support. That's a bear trap right there because we go down and then immediately close back up. That's a poke. That's a fake out. That's a bear trap. That's a retest of support. So what do we do over here? We consolidate at the lows. Gets everybody thinking how weak the dollar is going to be. And then it does the opposite. Squeezes and the dollar does not stop going higher. That was a bear trap. That's a fantastic looking bear trap. Are we in a bull trap right now? No. I think there's room for this dollar to keep going. Okay. But as we said before, if the dollar keeps going, That's not good for equities. If this tariff thing is starting to make the dollar get weaker, I mean, you're not seeing you're not seeing this currency strength chart here. You're not seeing the currency strength chart reflecting the dollar move today. So when this opens up tomorrow, I'm guessing opening tomorrow, where's it at? I would imagine it's going to be a pretty decent red candle to the downside. I still think the dollar is pretty well supported around 106 to 105.50. So in the interim, if we have a bit of a pullback on the dollar, that's fine. I would still be waiting for a trend line break, looking to see if this area will hold for support, and then if the dollar comes back to the same highs again and possibly goes higher. Okay, so we will see what happens. Oil we did, gold we did, silver we did. We left off on Bitcoin. It poked the highs. Is it going to be sustainable? I don't know. I was looking at MicroStrategy next. I'm curious what the gap is on MicroStrategy. I did another roll on this one. I did a roll on MSTR, and I might continue to do it. Right now, my MSTR is, I had the shares called at 310 and put at 240. So I've increased my profit target. It's currently trading around $400. Yeah, look, I could have made a lot more money had I done nothing to the downside. But I was playing defense. I was playing protection. I'm still going to get this called away for like $3,000 a profit or a share. My MSTR, I think my break even's down in the 280s or 270s. Let me double check that. So, 279.86. 279.86 is my break even. 310 is my covered call. What am I trying to do there? Oh, 279.86 minus 310, $30 a share. I get it called away for $3,000 a profit per account. It's not bad. I'll take it. And if I could roll it out to the end of March, maybe March 28th, maybe April 1st, maybe April 17th. I mean, if I have the shares, I've already tied up the buying power. I still have plenty of cash at the ready, stock option buying power. If I just go out another, 2 weeks or 3 weeks or 4 weeks, and I can get another $2 to $4, it's okay, right? To me, it's okay. So I might just continue to roll it. All right, what's next? Coinbase, got some income trades on Coinbase. We're poking some fresh highs. That's good. Got some 111s on Coinbase. Ethereum hanging in there. My EETH trade was profitable. Copper has been pulling back. This might be a spot on copper that I might look at. If we pull back to copper's lows, I'm pretty interested in maybe establishing some bull call spreads. Nothing right now though. I'm going to be pretty patient on copper. Is this a breakout? Maybe. Break, retest, and maybe some accumulation in here to then see if copper gets stronger. But I'd have to see China perform well for me to believe that copper is going to maintain some type of bull market. So if I don't see that in China, then I'm probably not getting too anxious on copper. Japanese yen, wishful thinking is that we head lower so I can trade the futures side. If I put in a trade right now, I don't know if the Japanese yen futures goes out past September. I think that it does not, which is why I haven't traded it yet. So there's my Japanese yen futures. And we go out to September 20th. Fudge. I want longer expirations on Japanese yen futures. Anyway, I'm not ready to trade it yet. It's pretty simple. Nikkei still sideways. This is Japanese yen. I mean, I do have some exposure on FXY. That's a Japanese yen ETF. I'm playing some dollar cost averaging in EWJ, which is basically it's the Nikkei 225 without the bottom 15% of stocks. German market, holy shnikes, man. The DAX is on a rip. So German market cranking. Look at that move on the FTSE. Wow. UK market cranking. Good for them. I don't know what that means or implies for their currencies, but it's nice to see there's some fresh highs. Argentina, I'd like to see a pullback still in Argentina. Brazil, I think if we have a window of commodity strength, Brazil is going to start to look a little bit better. I do have a pending order down here at $20. Mag 7, Apple is not really so this year as we started things off, whatever is holding to gains if we go to a advanced decline line for the year. Right now we have about, let me see. I'm curious how many stocks right now on average. Oops, get out of here. I'm curious how many stocks right now between the 50 and the 200 moving average. We're showing about 41%. 41% of stocks above the 50 period moving average, and about 54% are above the 200. So we're still in a corrective mode, right? Because if you have almost 60% of stocks below the 50-day, and you're still just above the 200, that is price has crossed over the 50. So you'd have your 50 period is now being broken, and your 200 period is still above, right? So you're less than the 50-day, but you're greater than the 200. Excuse me, the 200-day. We are still in kind of a corrective mode. So for the broader market, that's a bit of a wait and see. Nvidia's a nice run, and Amazon's had a nice run. I don't know if Nvidia's going to get called away at 140, which is where my collar trade is. Apple has not done anything crazy impressive. I do have some income trades in on Apple. I'd be willing to own the shares back down here. If Apple keeps dropping, the IV is high enough that I might just keep doing this. I might look at an April and a May. I might look at those tomorrow, actually. So trades this week. I'd like to look at Netflix earnings. I'd look to look at Apple for a 111. So write this down. So Netflix earnings, Apple 111. Amazon back up to 225. I had a trade last week that I ended up taking like a 20-cent loss on it, but it did get to my liquidity level. I was watching at 225. I just wasn't trading on Friday because I was out of office and traveling. But we did end up hitting the strike that I was talking about. So, I mean, it could have been a profit. I didn't hang on to it long enough, but it's okay. Anyway, Amazon shares that I do have, they're protected out into March. They have a 220 covered call that I'll probably end up looking to roll out, maybe to I'm already out to March right now. I can consider rolling to April and May if things are looking like they're going to be more positive. We might end up having like a, steady, stable, resilient first half of the year. I'm a little bit more concerned second half of the year, like once we get through the first 90 days when it's like this kind of honeymoon phase, is there a, you know, dark reality that's kind of overhanging or a dark cloud overhanging the market? We'll find out. All right. Google is still hanging in there with that quantum computing bump that it had in December, and just chilling at these levels. Uh, Look, this stock is going to be something to watch just because if it just goes sideways, there's not really much going on there. I mean, I would love. I don't want the stock to drop necessarily, but if we just ended up staying sideways and I can collect some income down here, I might look at these trades. Now, these are all already established for March and May. That is around, what is that? $3.50 a credit per contract, which I'm okay with on a couple of ratio spreads. But yeah, I mean, is Google able to break and go higher? Maybe. Let me see what the fair market value is on Google. It's probably accurately priced in. I would think it's close to it. So checks a lot of boxes, no crazy risks in this stock. I mean, its PDE ratio is like not super expensive either. That's not bad. Okay, Google. That's good. Fair value and discounted cash flow compared to its peers. What's the price to earnings, price to sales? Pure average between, I don't know why Pinterest. And by the way, Pinterest is a 95.6 price to earnings. Pure average is 36.8. Meta is a bit more expensive than Alphabet right now. This is an interesting group. Baidu, you can see like crazy low price to earnings. Yeah, I mean, it's hard to argue. Google looks like pretty good. Again, it's expensive at 196, but not a bad stock to say, hey, toss a couple bucks at it. If it was dollar cost average here, dollar cost average at the 200 moving average, and dollar cost average at any type of major support, I'd be willing to take that ride on Google. Okay, dollar cost, dollar cost, dollar cost. Could it get worse? Sure, anything can happen. But it's a massive, massive company. So I'm going to put Google in there for a ratio or a 111. Okay, Meta. This one, based on the bar count that I have on the 200, I'm not doing any trades unless we see a pullback, and then I'll start looking at more income trades down here. I took a lot of profit on Meta last quarter. I want to see it drop first before I put on any trades that I like. It'd have to be down below like the 4. I don't know, probably down here in like the, if we sell off first, the implied volatility goes up, and that gives me more distance to work with away from current price. So I'll wait for a drop on Meta. Microsoft, this one's been positioning well. We've come down to find this 200 moving average several times, and I've got this one's done, and this one's still going. So that was full credit there. This one's still going, and this one's still going. I might look at it in April. Look at that when I come back tomorrow. So April, this will be Microsoft. Look at April and May. And keep looking for some income trades there. Netflix has earnings. I do want to talk about this one before I go today. I'll wrap up here in probably the next 10 to 15 minutes. NVIDIA trading at 137. I've got it covered at 140 with a 130 put. Tesla, 426. I do have some shares of Tesla. I bought a little chunk there. I've got another pending order at 362, another pending order at 285, more income trades. I'm actually going to go out to Tesla. Look for April, May. See if I can do some income trades there. Berkshire Hathaway, that's responded really nice. This ratio spread out to March is looking pretty darn good. I want to see what this one's trading for real quick. I see your question on Boeing. I'll take a look at that one. Berkshire, the 410 by 4, it's a 415 by 410 put ratio spread, and it's up $122 right now out of a max like 2 and change. Yep. So it's still trading for $1 debit, and I took this trade in for 225. So if this trade is, I would say, like trading for a 25-cent debit or less. Okay, 25 cents or less, I'll take the profit. Just it's more capital efficient if I, rather than waiting all the way to March to get my extra 25 cents. I just want to see a little bit more time. Not a bad trade. Okay, bonds. SHY is 1 to 3 year. We've been up off the lows a little bit. That low was a December 18th Fed low. Okay, did the opposite with the longer term. If you go short term, we actually put in a low in the short term bonds on December 18th, which is the Fed rate cut. If you look at the longer term bonds, we have a low that stretched out into January. So the bond market actually went lower in the first part of the year, and we saw that because the yields have been going higher, right? So 7 to 10 year is up off the lows, but we did take in fresh lows into early January. TLT, same thing. We're off the lows a little bit. We haven't taken out any highs. We haven't chewed into this major decline. We're also not back to these lows where I'd say the market got really excited about a big rip there. This rally was the only reason that in 2023, okay, the only reason in 2023 that the bond market was positive was because of that last month or two in trading. Everything else in the bond market has essentially been, if you can, and I obviously don't want to eliminate it, but I would say outside of this rally, we have been in a 4-year drawdown in the bond market. Like one of the longest in history, one of the worst performances in history. Interest rates are high enough that bond markets tend to snap back a little bit. So I would think that for the next couple of years, you're going to see some somewhat happy bond traders simply because it's a way to diversify. It's a way to have some yield. It's a way to put some cash to work. I still think that the biggest risk we have this year is something breaking in the bond market. I still stand by that until this is going to, get on the right-hand side of this trend line and look to me maybe more range bound. I'm not sure. Could this go lower and get worse? Sure. At these lows, I'm probably going to establish another type of diagonal trade and try to, get on the right-hand side of the trend line eventually. So we'll see. Funds rate and yields. Okay, we had a little bit of follow through on the 10-year yield for a couple of days. Coming into this week's trading, if the dollar gets weaker, so if the DXY is down, I'd like to see some more pushing on the yields. Okay, I'm hoping that's the case, at least in the near term. If I'm wrong and it's sticky in here and it just starts to go higher again, there's a lot of concern that we're going into like a 5+% 10-year, which is going to squeeze a lot of things. It's going to squeeze business. It's going to squeeze debt. It's going to squeeze the consumer. Mortgage rates are ridiculous. If that's the case, you're going to be looking at like close to 8% mortgage rates if we get above 5% of the 10-year, which is insane. And this is the first time in probably 50 years that the Fed cut cycle has not seen the yields do the exact same thing as the Fed. If the Fed's cutting, yields go down. It's the exact opposite going on right now. So we're in an interesting environment. That's to say the least. Average mortgage up to 7% now. Sucks. We're literally 100 basis points higher from where we were back in September. Like, talk about the complete wrong move. But the market's showing us one thing, and the Fed is claiming another thing, and it's not easy. It ain't easy being cheesy. All right, let's take a look at China real quick. HSI getting some love there. Alibaba up. Okay. Baidu, let's see what happens here this week. Off the lows, this is fine. I'm just not holding my breath. What? Am I going to get this called away? JD. Oh my gosh. JD is covered out to not this Friday, but next Friday. But holy shnikes, I might get this thing called away at 39 bucks. Oh boy, that makes me kind of happy. JD stuck it out a little bit. I have shares at 36.82. So 36.82. If I get it called away at 39 in 500 shares, I repair this stock for about $1,100. Okay. And then I can get some buying power back. That would be 500 shares with a cost basis around. I get it called away at 39 bucks. So 500 times 39. I get about 20 grand cash back. Not bad. More buying power. Okay. You can do it. This is end of the month. Let's see if and I could roll. I mean, if it's worth it, I might roll it. I mean, for 500 shares and holding, if I could roll this by 25 to 50 cents, it's adding a little bit more to the bottom line. It's easier than just buying the shares high and reestablishing another position. Okay, so all right, I'll keep an eye on that one. This is making a nice little run. Schwab dividend, Schwab growth, both looking a little bit better off those recent lows. I bought those late last year. How many stocks above the 50-day? Now we're back up to 40% above the 50-day. How many stocks are above the 200? About 58%. This is on the S&P. So we're still in a bit of a correction, right? 40% of stocks above the 50-day. So that means 60% are below. So you have 60% of stocks below the 50-day, but yet 60% of stocks are above the 200-day. Right? So we're still in a bit of a bull market, but it's correcting when we're under the 50 and above the 200. We're in that correction zone. Nasdaq, this thing, popped aggressively back above the 50. You got about 42% of stocks now above the 50-day. Costco, son of a biscuit. Let me look at this one as a potential trade. I know we got some earnings coming up on Costco. Earnings are in March. Okay, let me look at a Costco trade. I don't think the credits were that great when I looked at them last week, but I was kind of hoping we did something like this. We have a little correction. I'd like to see Costco like flush down just to find the 200 moving average. And then I can look at some 111s down here. I can look at some income trades. I can look at some out of money credit spreads, whatever. I can also look at some bull call spreads and see if we get back to those highs. So a couple things to watch for Costco. Walmart, I have some shares, call it at 180 or 180 up. Nike, still have a 65 and 60 put. Home Depot and Lowe's watching kind of the health of the housing market and consumer. MasterCard Visa popped up in a big way. Look at that. Visa's all the way back to the highs again. I'm glad I got out of those bear call spreads. I can delete these now. I want to put in Amex as a watch list too. Amex, it would be like your higher. So American, was it APX? The heck? American Express. AXP, there it is. So AXP. There. So MasterCard, Visa, AXP, fresh highs. So we'll watch, but this is your, your higher demographic, higher net worth credit card holder, and then your more everyone else. Interesting to see the move difference, right? Amex higher, Visa has been pulled back, and then we popped up. MasterCard, same thing, pulled back, popped up. I mean, resilient. Johnson & Johnson, fine, got to roll out there. The non-farm payroll that we had this month, most of them came from the healthcare sector. Progressive, nice little bounce off that level there. This is out to February for ratio spread. Insurance, same thing, nice little pop. Got it way down here at 225. Palantir, ratio spreads. I'm going to stick with ratio spreads. I know a lot of people love Palantir. It is crazy high on the price to earnings, price to sales. Carvana, also big rip off that 144 moving average. Redfin, Zillow staying out of those for right now. And then sector wise, let's go sector by performance for the year so far. Who's our winning sector? Horse. What are your thoughts on the DXY when Trump speaks? I don't know. Dollar's already taken a hit. It was all on tariffs. Trump's probably going to say something. I don't know what he's going to say. It's an inauguration. The guy can do whatever he wants. Pretty much that. Expect that for his president. He can do and say whatever he wants. It's pretty much what we're giving him, right? So whether he tweets, says it, makes headlines, we're in the world of media where everything that guy says is going to be news, and he loves it. He wouldn't have it any other way. So, I mean, if he says crazy stuff, the market's going to do crazy things. That's it. Like, he likes attention. So I don't know what he's going to say today, and I don't care. I'm just trying to make sure that my portfolio is not going to be crazy volatile. But there's already been some interesting movements already happening. So considering that it's an MLK is a U.S. holiday, so we don't have markets open today. But if it's going to like take this information and like throw it into tomorrow, I mean, Forex is still open, yes, but equities markets, we'll see what happens tomorrow. Okay. Does he say anything during inauguration on crypto? I have no idea. Is he going to come out like spraying? Is he going to have like money guns because he just made, $25 billion in 3 days because of his Trump coin? Or is he going to be the reason that the market breaks because he's showing some greed and speculation and it's like market can't sustain that crap? We'll see. It'd be ironic if he breaks the crypto market because he tries to get greedy and has, Don Jr. and Eric and Melania and Trump all have their own coins now. Awesome. Who knows? All right. Where did I leave off? Oh, I'm going to go sectors. Sectors, I want to price out Netflix, and then I'll let you go for today. So year to date on sectors, everything is green except for consumer staples, which I think is interesting. Reserve of Bitcoin, that is such an uphill battle. There's no way that's just like Trump said is going to happen. There's no way. We can be pro crypto, right? We can be pro crypto. We can continue to deregulate. We can encourage more kind of mainstream investments to get into crypto and have some exposure to crypto. But actual Bitcoin reserves, I don't think that just happens magically with a wave of a wand. That's not an executive order. Like, that's going to have to be Treasury and Congress all agreeing. Does that ever happen? This market loves gridlock, and that's what our government is kind of built to do, is gridlock. So I think that's a long ways away. I think it sounds good in theory, and people got excited about it, but the reality is it could be a much tougher battle ahead. All right, what's leading the way? Energy. I looked at this last week. Energy was up over 8%. Now it's up 9.69. Energy is the fastest horse in the race right now as far as energy performance. That is also showing a non-correlation to the S&P. This was up 1.16%. Now we're up 1.96%. So we're still positive for the year. Okay. But energy is up in a big way. Now, I don't know if this is energy up because we have it as a diversifier and this is rotation out of the S&P, or if this is because everyone is optimistic on AI infrastructure. Everyone's interested in improving and adding more electricity. So we need to have nuclear energy. We need to drill more and go back to, we're going domestic drilling. We're going to ocean drilling. I don't know. Or is it up because it's getting more expensive. Is this an inflation sign, or is this an opportunity, or is this a optimism sign? To be determined. Because if you look at oil prices, and if oil prices are up, I don't see that as like, oh, energy is up on optimism. I'd say that is energy is up on inflation. Okay. But like I said, it's that towing the line of like if it's investing in energy, reforming energy for adding to our grid, having more energy efficiency, having more available, having more storage, um, that could be optimistic. But you just got off me, guy. What are you doing? Right. But energy is leading the way pretty far. Industrials, materials, even I mean, look at the sectors that are leading right now. Right now, okay, tech down. Right. Like I mean, I'm not saying it's not good, but clearly, Mag 7's been underperforming and tech is down. What's leading right now? Energy, financials. I'd say would be stable. Industrials, materials, and utilities. Again, all these lumped together. These are typically diversifying from mainstream index. So is it a diversifier away from the index, or is this a add-on for optimism? I don't know. Okay, I don't know. But I think energy is a good play this year. I'm long energy for this reason. I'm diversified for energy for this reason. I wish I had better stocks and utilities that would offer more option trading, but they do, but they're pretty crappy. Like the strikes are wide. The premiums are garbage unless you're at the money or in the money, which if I'm going to sell premium, it's hard to do that. So, anywho, this is an interesting mix of sectors that are leading the way so far, right? This shows like a good rotation away from mainstream. This shows a good rotation out of tech for a moment, and we'll see if this is like the new maybe Q1. Maybe Q1 is a good diversifier, but I still like the play. Okay. All right. So there's a lot of TBD out there to be determined. There's a lot of wait and see. That is why I am playing defense on the stuff that I own. I'm keeping cash at the ready. I've got a lot of trades that should actually be quite profitable. With the market doing this, where we have price is not gangbuster highs and it's not breaking down and falling. Well, that means that in this area I can make a good amount of money. One of my services, I have 7 open trades right now, and hopefully this week there's going to be 7 for 7 in winners. Right. So before I go, let's take a look at Netflix. I'd like to price this out and have this ready to rock and roll for tomorrow. So Netflix is trading at 858. I'd still love to see Netflix drop down towards the 200 moving average, but I want to price out basically what the expected move is. So we have a weekly ATR around 43.41. So we have weekly ATR at 43.41. Okay. And my earnings play, let's look at Netflix here just for longer term discounted cash flow. Checks a lot of boxes, revenue, subscribers. If Netflix could ever get the Super Bowl, it'd be hard to ever dethrone them. If they're getting like big, crazy events like that, I know that Monday Night Raw and like TKO Holdings, so WWE stuff is now Netflix is adding to popularity. I think that's a good play. That's why I picked up TKO last week actually. So anyway, like Netflix continues to add live events and live sports, and that's pretty cool. Here is we're priced to earnings 47.1. We'll look at that versus peers. It is showing like there's still some room. There's a bit of room for growth. 925. I mean, I said momentum alone could probably carry this up to $1,000 stock. Okay. Looking at this versus peer average, Spotify has been crazy expensive. Formula One Group, that's interesting. Walt Disney, way down. Warner Music Group, I'd probably stay out of Warner Music Group forever. But Netflix is right there with a lot of money, a lot of revenue, a lot of subscribers. As long as that keeps growing, looking good. So where are we at? Well, we could probably make a move either down towards the 200 or up towards all-time highs. So I want to see how well is options priced out. So let's look at option slam. And I'm logged in. Let's go to Netflix. So we have average move is around 10%. So that's about an $80 move in $80 to $85 move in Netflix. Now, I said the weekly average is around 40, 43, 41. So we're looking at about a 10 average earnings move is 10 to 10.25%. Okay, now I'll go back and verify. So we had 18, 22, almost 18. Then we have a 9.4, 9.9, 10.46, 11.8, 12.8, 11.89. I mean, to me, I think a 10 is fair. 10 at 10 is very fair considering where we've been, and that's a nice little average to work off of. Now, what I want to know is how many times over the last 10 earnings prints have we actually gotten to 10% or gotten greater than 10%, right? So we're looking at 10.21%. I'll be more conservative and say 10%. So 0.10 times 858.10 is an $85 to $86 move on the stock. Okay. So we're looking at $85 to $86 move. Right now, how many times over the last 10 earnings, if we went out, let's say 8 days, and you've seen Frank and I do this quite a bit over the last year or so. So out of 8 days, if I take a trade tomorrow on Netflix, I can either go out to Friday's expiration, which should be a 3-day expiration, or I could go out another week and go out to the, what would it be? 20, it'd be the 31st. Okay. So how many times have we gotten to at least 10%? So that one does. That one does not. That one does not. That one does. That one does. That one does. That one does not. That one does. That one does. And it does on day 8, but not on day 3 and 5. So I'm going to say no. In typical earnings fashion, I see this most of the time. 4 out of 10 times, 5 out of 10 times, 6 out of 10 times. I have rarely seen doing this little, this is how I like to price out options and earnings. Rarely do I see like 7 out of 10 times it got to the expected move, 8 out of 10 times the expected move. It's usually like 40 to 60%. So I mean, earnings is always really interesting. It's a catalyst that I think is something that gets the market moving, which is cool. But you just got to think about your risk. You got to think about the risk in earnings plays. So 6 out of 10 is pretty good. I'll take 6 out of 10. I think that's a decent probability. Now, the other thing I would like to look for, this might pop up again tomorrow. Do we have any major, liquidity levels? Do I have any big open interest? Do I have any major order flows? What about the changes in options in the Greek chain? I'll have to see with another piece of software tomorrow morning when the market's open. But I think this is worth looking at. A move of $80 is not really going to do any crazy damage one way or the other. So if we went up $80, okay, $80 would be Netflix is able to test the highs again. That's essentially what it means, right? If we have an $80 move, we're going back up to the highs. Cool. Okay. If we see an $80 move to the downside, now we're talking back into like the 100, 144, or 200. And I don't know what's going to happen. I would say that if we had a drop to the downside, that would be more of the technical run of back into this trend line, finding some dynamic support at the 144 200 moving average, unless we just had like an abysmal earnings print. But could we see us with Netflix back at these gaps? Sure. Could it miss on something and leave a big fat gap right here to go fill later? Sure. So it wouldn't necessarily discourage me to then, kind of buy the dip and look for a gap fill on Netflix. But as far as taking a trade this week, well, if I position for that gets me money, that gets me money, there's still going to be some risk in the middle. But as long as that risk is small, I'm willing to take the trade. Okay. So if we have 6 out of 10 times, the prices at least hit a 10 to 10.25% move, then I can price it out where I could do something where I get paid either way. If we go up and I win and I lose down here, I still walk away profitable. If I win here and I lose here, I still walk away profitable. Worst case is I want to make sure the risk is manageable in the middle, and that's probably my play. Okay. The other option would be, could I do like a iron condor where if price goes up here, I still make money. If price goes down here, I still make money, and I give myself this big range. I mean, that might make money too, but that's going to be like pennies on the dollar. I would make essentially like 10, 15, 20 cents on the dollar, which is a lot of extra risk, which I don't necessarily want to take. But the probability of profits, I would assume fairly high, like 70 to 80% profit. So always a trade-off. But it's priced out for tomorrow. I'll take a look at it, and if I like the trade, I'll price it in and see what we get. All right. On that note, I'll let you go for today. Enjoy the rest of your Monday. Trump should be coming up at noon with his inauguration speech. We'll see if there's any headlines. There's no more market in equities today. Keep an eye on the dollar, I guess, if you're looking for some currency movement. The dollar's still willing to move. Maybe Trump gets it moving a little bit. Okay. All righty. Thanks, everybody. We'll see you tomorrow. Bye.
Thanks for watching today's A1 Trading Show. We hope you enjoyed, and we're excited for a brand new year of trading with you. If you're new, consider subscribing for daily videos and live streams all year long. Be sure to check out the description below for our latest deals and offers. 2025 is just the beginning of our best year yet. We'll see you tomorrow.